You're not going to believe this, but I just saved a client $47,000 in taxes using a strategy her previous CPA never mentioned in 8 years, despite her making over $300,000 annually and being the perfect candidate for it. Hey everyone, I'm Tiffany Phillips, and if you're a business owner who feels like you're overpaying in taxes, this video is going to change everything for you. Hit that like button if you're tired of leaving money on the table with your taxes. I'm talking about the Backdoor Roth IRA strategy. And when I showed my client the numbers, she literally asked me, how is this legal? And why didn't anyone tell me about this before? Here's the thing. This isn't some obscure loophole. This is a completely legal, IRS-approved strategy that high-income business owners should absolutely be using. But I bet that 90% of successful entrepreneurs watching this have never even heard of it. And here's what makes this even more urgent. We're at the end of the year, and if you're making good money in your business, you might be missing out on this strategy right now. Time is literally running out to implement this for your current tax year. Make sure to subscribe and hit the notification bell because I share tax saving strategies like this every single week. Let me start with a story that'll probably sound familiar. I had a client, let's call her Jennifer, who owns a consulting business. She's crushing it, making about $300,000 a year. But when she tried to contribute to a Roth IRA, she got shut down. Why? Because she makes too much money. See, in 2025, if you're single and make over $165,000 or married filing jointly making over $245,000, you can't contribute directly to a Roth IRA. The government basically says, sorry, you're too successful for tax-free retirement growth. But here's where it gets interesting. While they won't let you contribute directly to a Roth IRA, there's absolutely nothing stopping you from contributing to a traditional IRA and then converting it to a Roth. That's the Backdoor Roth IRA strategy. Think of it like this. Imagine there's a VIP club you want to join, but they won't let you walk through the front door because you make too much money. But there's a side door that's perfectly legal to use, and once you're inside, you get all the same tax benefits. Drop a comment below if you've ever been told you make too much for a Roth IRA. Now, why should you care about this? Because Roth IRAs are absolutely incredible for wealth building. Every dollar you put in grows completely tax-free. When you retire, you don't pay a penny in taxes on the withdrawals. It's like having a secret account the IRS can never touch. And the numbers are staggering. If Jennifer had been doing backdoor Roth conversions for the past 5 years, putting in $7,000 annually and assuming a reasonable 8% return, she'd have about $45,000 growing tax-free right now. Over 20 years, that could easily become $200,000 or more completely tax-free. All right, let's get into exactly how this works because it's simpler than you might think. Step 1, you make a non-deductible contribution to a traditional IRA. For 2025, that's up to $7,000 or $8,000 if you're 50 or older. Step 2, you immediately convert the traditional IRA money to a Roth IRA. Since you didn't take a deduction on the contribution, there are no taxes owed on the conversion. Step 3, that money now grows tax-free in your Roth IRA forever. If this video makes sense so far, give this video a thumbs up. Now, there's one important thing to watch out for. It's called the Pro-Rata rule. If you already have money in a traditional IRA from previous years, things get a bit more complicated. The IRS looks at your traditional IRA as one big pot, and you can't just cherry pick which dollars to convert. But here's the thing, even this isn't necessarily a deal breaker. Sometimes it makes sense to convert some of that old traditional IRA money anyway, especially if you're in a lower tax bracket this year. The key is having someone who understands these rules and can run the numbers for your specific situation. Because what I see happening all the time is business owners either missing out on this strategy entirely or trying to do it themselves and making costly mistakes. Let me be crystal clear about who should be considering this strategy. If you're a business owner making over the Roth IRA income limits, and let's be honest, if you're watching this video, you probably are. This should be on your radar. I'm talking to the woman entrepreneur who's built a successful consulting practice, the business owner who's tired of feeling like every financial decision is a shot in the dark because no one's giving them real guidance. Comment backdoor if you think you might be eligible for this strategy. But here's what I want you to understand. This isn't just about the $7,000 you can contribute this year. This is about building a foundation for tax-free wealth that compounds over decades. I had a client who started doing backdoor Roth conversions 10 years ago. She's now sitting on over $150,000 in tax-free money. When she retires, that could easily be worth $500,000 or more, and she'll never pay taxes on it again. Now, let me tell you about some mistakes I see people make with this particular strategy. Mistake number 1, waiting too long to start. Every year you wait is a year of tax-free growth you're giving up. Mistake number 2, trying to do it yourself without understanding the rules. These mistakes can cost thousands in unnecessary taxes. Mistake number 3, working with a CPA who doesn't understand or won't implement advanced strategies like this one. You deserve to work with someone who sees the big picture and thinks about wealth building opportunities. And here's the urgent part. We're in the final stretch of the year, and if you want to implement a Backdoor Roth IRA strategy for 2025, time is running out. The contribution deadline for IRAs is December 31st, not April 15th like your tax return. If you want to make a 2025 contribution, you have to get that money into a traditional IRA before the ball drops on New Year's Eve. Share this video with another business owner who needs to see this before year ends. If you're making $300,000 a year and you're not doing a Backdoor Roth, you're potentially missing out on decades of tax-free growth on $7,000 annually. Over 20 years, assuming an 8% return, that's over $300,000 in tax-free money you're walking away from. But here's what really gets me fired up. It's not just about the Backdoor Roth. If you're a successful business owner and you haven't done comprehensive tax planning this year, you're probably overpaying by thousands, maybe tens of thousands of dollars. Once January 1st hits, most of these opportunities are gone. You can't go back and change your 2025 tax situation in 2026. Here's what I want you to understand. The Backdoor Roth IRA strategy is just one tool in what should be a comprehensive tax strategy. And if you're only focusing on one piece of the puzzle, you're missing the bigger picture. Let me tell you about a client I'll call Sarah. She came to me because she'd heard about the Backdoor Roth and wanted to implement it. But when I looked at her overall situation, I realized she was missing so much more. After we restructured her business and implemented a comprehensive tax strategy, we saved her over $40,000 in taxes the first year alone. The Backdoor Roth strategy was just one small piece of that. If you want to see more advanced strategies just like this one, make sure you're subscribed with notifications on. This is what I mean when I say you deserve strategic guidance, not just compliance work. It's about looking at your entire financial picture and finding every legal opportunity to help you keep more of what you earn. 99.5% of the tax code is actually written to help you save money, not make you pay more. But most business owners never take advantage of these opportunities because no one's shown them how. The Backdoor Roth IRA is a perfect example. It's been available for years, it's completely legal, and it can save high-income earners thousands in taxes over time. But I bet that 90% of the business owners who could benefit from it have never even heard of it. So here's what I want you to do right now. First, if you think you might be eligible for a Backdoor Roth IRA, don't wait. Get that traditional IRA opened and make the contribution before year end. But more importantly, if you're tired of feeling like you're overpaying in taxes and you want to make sure you're taking advantage of every legal strategy available to you, I wrote my book, Your Biggest Expense, specifically for business owners like you. It reveals 10 strategies that most CPAs never mention, strategies that could save you 30% or more on your taxes. You can grab your copy at yourbiggestexpense.com, and I've included some exclusive bonuses that walk you through exactly how to implement these strategies before it's too late for this year. The link is in the description below. Don't wait on this. Look, your taxes are likely your biggest expense, and every year you wait to optimize your strategy is money you're leaving on the table. Don't let another year go by wondering if you're overpaying. Head over to yourbiggestexpense.com right now and get the strategies you need to stop overpaying and start keeping more of what you earn. And before you go, hit that like button if this was helpful, subscribe for more tax saving strategies, and let me know in the comments what other tax topics you want me to cover. Remember, it's not what you make, it's what you keep. So keep more.